Hello traders and welcome to another video review. Today is Monday, June 8, 2026. Let's take a look what do we have on the economic calendar for today. As usual in early week trading, we got the situation where maybe there is not that much data scheduled for release because we got NFP Friday. Remember, very big beat of the NFP. Last week, if you didn't notice yet. We got one very important data release overnight, the GDP from Japan, in line with the expectations, 0.5% up from 0.3%. The rest of the data, adjusted current account up and the current account up as well. Private sector credit in Australia has been published as well. At 8 o'clock we got the German factory orders, which are moving lower yet again from 4.5% to minus 3.8%. Very big deterioration, bigger than expected. We are still waiting for the data from the Switzerland SICO consumer climate is scheduled for release at 9 o'clock together with the German Bua Balz speech from the Germany. And that's about it for today, for the very important and medium important data releases for Monday. Without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar is showing us deeper deterioration lower. So right now we just have the 50% movement to the upside after the retracement of the wave C. Now it is not important anymore. It looks like, well, we have a breakout below this trend line. That's obvious. Big breakout below the trend line. We are still located. The price is still testing the 1.1511 technical support as expected. But our let's say corrective cycle must be adjusted, so we will leave this ABC to the downside and we label this as the wave Y. So let me just remove it and then I will get my complex time price and time consuming situation here with the chart. Sorry, that's obviously wrong. This is the wave X and the wave X is going somewhere here, and the wave W is ABC, right? So the ABC has been completed here, and now we got the wave X. Okay, so that's the top for this. There you go. And now we are developing last leg, possibly last leg of the complex corrective structure, which might be the wave Y. It looks like we got ABC zigzag to the downside, wave W, X little bit more complex wave to the upside, right? And now we got still the movement to the downside. The wave Y might be any form. So this is the situation when we will consider complex corrective cycle to complete, despite the fact that the market conditions are extremely oversold. Next target 1.1444. So the correction continues on euro dollar. Okay, where is my cable? And on the cable we got the same situation here, movement to the downside after the local technical resistance 1.3485 has been rejected. Breakout below local technical support 1.3407. Now it is a resistance. Breakout out of the range below 1.3374. Now it is a resistance, and we are approaching the lows for the wave A located at 1.3299. So as expected, wave C to the downside is now being developed. We got the wave A movement to the downside completed, wave B completed, A, B and C to the downside for the wave C, or maybe for the 5 waves, but this one looks more like ABC. So maybe this complex corrective, this simple corrective cycle might evolve into more complex in time and price. Please remember, if we break below the lows of the wave A, then the next target is around 1.3159. So the US dollar versus the Japanese yen should be going higher, shall we? There you go. US dollar versus the Japanese yen is going higher, just as expected. steadily, step by step, dips are being bought, dips are being bought, consolidation, dips are being bought, dips are being bought. So the bulls are in charge of this market, despite the fact that we hit again extremely overbought conditions. Sooner or later we will hit 160.40 and then 160.73 as we develop upward movement for the US dollar versus the Japanese yen. Nothing has changed here. US dollar versus the Japanese yen is going up. So what is gold doing? Going lower. We broke below 4,348 after the flag pattern has been developed. Fake breakout to the upside, smash to the downside very, very swiftly. So technical resistance is now 4,455. This is the resistance, which is red, red. Yeah, can you change it for red, please? Can you change it for red? Thank you very much. Yes, and now this level here, 4,350, is now technical resistance. So the movement to the downside is moving, is developing very, very swiftly. So daily time frame chart is showing us that the next target for the gold is the low of the wave W at 4,098 dollars, and this will be very, very interesting situation when we get there. It looks like we want to get there. Please remember, this is the wave W, this is wave X. Now wave Y is being developed as a part of the complex corrective cycle to the downside. So the low below the wave W is generally in play. All right, so where is the target? It depends. The target for the gold might be located here, for example, 3,886. So that might be the target for the gold. Why not? It's a technical support, very nice technical support. But if we measure something, let's measure the length of the waves, shall we? Wave W is here. From the top of the wave X is here. So if we measure 50% of this wave, then the target would be somewhere around 4,146. If we measure 61% extension, the target would be around 3,959. But the 100 extension to the downside, so the equal of the length of the wave W measured from the top of the wave X, is at the level roughly around 3,387. So that's the situation here with the measurement and the Fibonacci. So that's the situation on gold on daily. S&P 500 finally makes some moves to the downside as we broke below minus 2.41% towards the extremely oversold conditions on the RSI. So right now we are trading around 7,342. This is the low, and we've made minus 3.68%. So that's the biggest correction during the whole movement to the upside. So we should see more downside to come quite soon. This situation here with the zone here might be, of course, considered bearish because we broke below the very nice but very weak demand zone, and located between this level 7,517 and 7,491. Now the market is bouncing, but we have the first very nice correction, and we will see how this will play off in the future. Excuse me. Now we got the crude oil. Crude oil broke below the short-term trend line support. Look at this. We have the retail gap yet again here. So it might be quite often these days to have this gap here. So maybe we will do it, I don't know, maybe yellow or something like this. Can you see the yellow? Yes, yellow and black. Yellow and black. So we see the levels here. Of course, the gap have a tendency to be filled sooner or later. So for now, we are very close to 94, 93. So we bounced a little bit, but generally, this situation is technically very sound. The bulls and the bears, they have no idea where they want to go. They just oscillate from extremely oversold to extremely overbought conditions on a 4-hour time frame chart for now. And last but not least, the Bitcoin hit the $60,000 level, and the $60,000 level is the low from, let me just switch to the daily because I can't see that far. This is the low. $60,000 has been hit, a little bit below we traveled. 59,130 is the new low. Let me place the line here. So the line has been placed here, and now the situation is very, very clear. We are moving up from the extremely oversold conditions on a daily time frame chart. Nevertheless, the first technical resistance at $65,000 might be very, very hard to basically to bounce. What is very interesting, okay, let me just relieve. Okay, 51%, I will leave it. This measurement is 52%. Now it will be like 53, so not big deal. But look at this. Look at this situation here. We have a almost perfect bounce from this trend line, right? So we got boom, we got boom here, a little bit down, breakout, movement to the downside. A little bit of the support has been found here. Nevertheless, for how long, we just don't know it yet. We need to break above 64,975 in order to find out what is going on here. Momentum is obviously a little bit up, and it's now testing the level of 50 on a 4-hour time frame chart. Nevertheless, it's clear that the bears are in charge of this market, and that might not be the last leg to the downside. However, let's just watch the lower levels, because 59,130 is now done. Very big pin bar here has been done, as you can see. Let me just zoom in. Very big pin bar, a little bit of the test, little bit of the low volatility, movement to the upside, movement to the upside. So it looks like the situation here looks very bearish. However, the bulls are trying to do some kind of a pullback. For now, they hit 50 on the RSI. Crucial technical resistance is ahead of them. It's the short-term crucial technical resistance. Then there is another one, key technical resistance, 69,289. How this is going to play out, we will see in the future. Please watch this level for sure. Please watch this level first, and then we will see what will happen with the Bitcoin. The bearish pressure is enormous, and it might last a little bit on the Bitcoin, despite the fact that we have this kind of a movement to the upside. Okay, that's everything today for me for now. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.